Hey guys, it is almost 5 p.m. Sunday, May 3rd. Futures are opening up soon, so we'll take a look at that. And I wanted to kind of go through, I have a couple ideas actually for Monday. We're going to play the if this then that game. So obviously we have a top in here, I think that is pretty, pretty certain. It's a short-term top there. We bounced off with a lot of energy off the 200-day exponential moving average. The simple moving average is higher. Exponential is more of a one that collects current data and more in near time. So I think it's a fair assessment on the S&P 500 that we've hit a pretty solid brick wall in the short term without any further news that would change the psychology of the market dramatically or fundamentally. That's kind of not expected, but who knows with this market? You could have some, news coming out of another pharma company. I don't think it would last because these, moves usually technicals precede fundamentals. So let's get to the deal here. if you're going to start moving sideways in a market, which I'm not opposed to drawing channels if we are moving sideways, but this is not a sideways moving market, just as this wasn't a sideways moving market. So I draw my channels in directions that we're moving. Obviously, a lot of guys are drawing a channel from down here recently and saying that we broke this wedge here and we're going to collapse now to the downside. Obviously, Monday and Tuesday will tell us whether that's correct information or not, but I don't really see that as being an accurate channel. I don't really like this using this kind of bear reversal candle for charting purposes. I think the channels are more subtle and more sadistic, that they can just drive the bears crazy. And you've seen a couple of channels that I've been working with. But I think if we are going to go into a transitionary period sideways, it's fair to say that there's three different levels from three different waves that we've already encountered. The top is obviously simple, right at the 200-day exponential moving average, and then I think your initial bottom that we're going to see will put us in this 277-ish area as your floor, and I'll tell you why. And it's more of a psychological and technical reason. And so we have this big extension wave B from the bottom, and we kind of get up into this level, and it's like, whoa, 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 we're starting to get a little bit of overhead supply and some energy pushing us back. But as we push up in there, we have a candle of indecision with a close and an opening very close to each other. Then we have a pullback. The long tail here suggests that it wants to stay up in that zone. So it fires up higher. And then we pull back, and we have a little time consolidation to kind of eat up the clock there. And we put a tail kind of on the bottom of that area. Might not have caught it cleanly. Then we push up through, and we start to break down, but the energy says, I want to go higher. And usually that's when you have these stretch points, or when the market fires back up the other way. You have an extension too far on one level. We saw that on the Qs, and we fired back down the other way. So we're going to call this level, obviously, our top level, riding along the 200-day exponential moving average, which is right around, let's just say, 294 and change. And then obviously the bottom floor is around, I don't know, we're going to say 277. We got a couple tails that are lower than that, but inconclusive. And then our middle area is simple. We have a close and then two tails that kind of touch right along the 264 and change area. That's a very short transitionary period. These aren't going to be perfect, but we're just trying to explain some different levels here. This is a transitionary period from the lower channel where we spent some time in to the upper channel we spent some time in. So if we break below into this segment, we're going to zip right to the bottom. There's not a lot of time spent in this area to give us any consolidation energy. So hopefully we got to hold this sideways transition. If we start to go into a sideways channel, we got to hold that 277 area. Or once we break that, I think there's a lot of air in here, and we're going to go right down and test the bottom, the 265 area. And then obviously our initial area on the bottom is going to be this area where the bottom of the middle transitionary area is our support, and this is our lower end here, which is around 264 and change. So these will be our three areas if we're looking at from a sideways pattern, which we might go into actually now, since the market still has this energy of the Fed supporting it, yet we have this overhead energy of negativity and lack of fundamental reason behind pushing further up to the upside. So actually, let's clear this drawing set here and start fresh. So there's also a couple channels that I've been looking at that actually literally drive the bears nutso here. And if we're continuing with this upward trajectory, you might look at the top channel, and these are all parallel channels, as kind of looking something like this. And it probably kind of runs right along this here. And oddly enough, if this isn't drawn with perfection, you'll get the gist of it, because it kind of lines up with the McClellan oscillator, which means we have a little bit more to pull back to kind of hit this little transitionary support line on the move that we've seen here and kind of bounce. So that would tend to make sense, depending on how we open up Monday, that we have a little bit more wiggle room to the downside here, to this lower channel. If we replicate this on the top end, you'll see that it kind of makes sense. We have a little area just like that, so we'll call that the momentum channel. And within this top channel, there is a higher area too that kind of runs along these little lower area, lower candle tails in here, and that's like the super momentum line there, we'll call that. But these are all parallel channels, so you can kind of see the psychological battle along those lines. And then if we have a parallel channel to this one as well, it is the lower channel, which kind of runs just like that. And you'll see how we have some common touches in that area. You can even raise it because we have an open in this candle below it, and it doesn't really matter. The energy fires up. So how torturous would it be for the bears if we just simply are going through a big bounce, and then we fire up into this channel? Whoa, a little bit too much, too fast, right? We couldn't get into the momentum, the real momentum channel. We pull back, and then we pull back into the bottom part of this channel. We build up energy. Now we're in the momentum channel. We're liking it up here. A little bit too much. Pull back, back up again, and now we're just going to retest this area, which also would coincide with the opening of the 278.90 area that we talked about getting a bounce off of. So a lot of stuff lines up at this 278-ish to 278.80, 278.90, 279 area for a bounce. If we gap down in the morning through that area, I think I could possibly see a scale in with a closing stop at like 276. It would be hard for me to do that. I just think that I don't know that we can get enough energy to push us further down on 3 days in a row. We're probably going to want to have some type of a bounce here, unless there's some fundamental reason behind us not getting a little bit of an energy bounce there. Nothing that I can see over the weekends really changed the market psychology. It still is driving the bears crazy. Like I said, if we're just simply bouncing into these little transitionary periods, channels, I'm sorry, that would be a good case for a bounce, just like we talked about on multiple levels. The McClellan oscillator, some moving averages in there. You saw the 50 on the SPY. Now remember, all the indices are moving separate. The directions are going to be the same, but you know, QQQ is well above, obviously, the inflows into technology, given the current state of the environment, of the economy, the environment too, is well above the 200-day exponential moving average. So that's been a strong area. Just like the IWMs, when they get down to these lower areas where they've already been pounded into the trough of 2016, are probably going to be very resilient and refuse to go further down should the market break and collapse into these lower areas that everybody's talking about. That's kind of where I think that the TNAs and those leverage ETFs on the small caps will work great, because they're just going to refuse to budge much further to the downside. In fact, they've outperformed recently upside. If you compare the IWM movement that we saw in here, was just powerful to the upside versus SPY and QQQ. But obviously, when you get that stretch in an area that's very vulnerable to pullbacks, the pullback is probably going to be more significant in the IWM. But on the upside, you're going to have more juice too. So here's the channels that I'm kind of looking at. We showed you the sideways channel. This kind of lines up with the thesis. Should we get down to the 278, upper 278, lower 279 area on Monday and start to put a tail and then push up through there, I can narrow down those numbers a little bit better. Obviously, we're just drawing these in real time here, but you can see kind of the transitionary channel, upper channel, retest of the transitionary, retest again. Could possibly happen tomorrow. Now, should we, like I said, should we gap down and start going to this gap, you'd have to be very careful. You know, a scale in would be an interesting thing early on in the morning to see if we get a snapback reversal, because sellers haven't really had a chance to get on there. I think there'll be nothing but buyers if we break this and we could snap back up in there. But a perpetual move to the downside would probably have me getting stopped out if we don't show an immediate kind of snapback rebound from that level. Got a couple interesting stocks too I want to look at, but I'll do that on the next video. One's an ETF and one is a stock, and it's a defensive stock. Literally, not defensive like market psychology, but a defense stock. And I'll go over that next.